Happy Wednesday to everyone. It is, we're going to talk a little bit of politics as this goes on because there's some big changes, it seems, underfoot in the US and what it means for markets. And not a lot of people are talking about that. I ran a poll yesterday at ForexLive, pretty good response about what will it mean for markets if Biden drops out. And it was pretty split. I mean, it was about 58-42 in terms of stock markets going higher. And I'm just going to think through on that. Because there's so many possibilities of what might happen next, who might take over, and where things might go, and what the market's really thinking about right now. And I think there have been some tells. So I'm looking forward to talking about that. And we're going to talk about, a lot of this is going to be about the psychology of trading, about what wins in markets. We'll talk here, we'll get it moving. And it's a bit about me. I co-founded ForexLive a long time ago, been doing this for a while, but what I do for most of my time and energy is trading in markets with news, really waiting on everything. I'm not sure. Someone tell me, can you see the video here, or you just see my screen? In any case, where's this chat gone? You can hear me? You see me? Yeah, we can see you. Okay. Well, let's show you here if my setup here in my office. I actually got a video about it as well, and it's every news service in the world, and usually I have 2 squawks going in the TV, and it's really just about staying on top of everything that's happening in the world, and that is my edge. So, and that it's just something I really love. One of the things I was thinking about yesterday in this political thing is Jamie Dimon. I think that's like an outside case that's not out of question that somebody else steps in and runs for president. And, Jamie Dimon has sort of flirted with that idea in the past. Obviously, never really won a campaign, but it would be a short campaign. He talked about his day. He wakes up and reads 5 newspapers, and he kind of talked about, he kind of leaves through this one and then reads the front page of the Wall Street Journal and this part, and New York Times, and the Financial Times. And listen, there is a lot to be done. And the first kind of tip I'm going to talk about is really you got to do the work, no matter what business you're in, and especially in this business. Is if you want to stay on top of things, if you want to be on top of things, you got to stay on top of things. And markets are always changing. You'll go into a lot of webinars like this, or a lot of people who teach about markets, and they'll tell you this is the way it's done, and that's not always wrong. But more often than not, it changes. This game is always changing. And what worked 2 years ago or 5 years ago doesn't work right now. And, there's a lot of factors that go into that. And there are a lot of things that come back and work over time. But you've got to be willing to change. And part of that is doing the work and figuring out, okay, what's driving markets right now? What's the real driver? Because a lot of people say, it's this, right? It's QE that's driving all this. It's liquidity. Well, that's not, there's never really that one answer, and it changes, and you got to stay on top of it. And I really think the superpower in markets is doing the work. I'm not sure how well you can read this if it's smaller on your screen, but this is Jim Rogers. So he's sort of a legendary commodity investor. And I found this to be entirely true. That, and I'm in a lot of, I watch the speeches, and I'm covering the Q&A, and I read the speeches. And when you go into these live streams, and you can see them on YouTube sometimes, how many people are watching? And it's only broadcast in one place. And you might see 200 people in there. That's it. Nobody is doing the work. And these are market moving comments oftentimes. Now, a lot of other people might get it on a wire or whatever, but you're still missing nuance in oftentimes with something like that, and you could be a little bit lagged. So there's just a huge opportunity in whether you're trading stocks, whether you're trading macro. And I think a lot of people out there don't realize just how few people are doing the work. I saw a note the other day. It said that Goldman Sachs, so pretty reputable firm, they don't share with their analysts the number of opens on their emails or the number of times that the research has been downloaded. And they don't share it because it would be so disheartening to the analysts to see how few people read their research. And I completely, totally have seen that in my life over and over again. So there is an edge, and I think when you have that edge in doing the work, you have to recognize that you have the edge. There's always this feeling in markets that someone else knows more than you do. And that's, I really don't believe that's the case. It's so many people are distracted now. Just focus and doing the work is my edge. And I talked sort of last year about trades and sort of the ones that I've been on and pretty bullish on. And this was in a presentation from just over a year ago in South Africa, and I had 4 conviction trades, and they were that margin expansion would occur because of AI. And at that time, it seemed the AI trade was late. I had run a lot, and it's certainly run a lot more, probably more than I would have ever imagined at this point. But the trade was on the sort of the broader market and expanding margins, less employees doing the same job. Now, that's worked out tremendously well. Talked a lot about the green transition. I think it's a huge theme. Energy in general, how much energy we're going to need. Again, that's just been supercharged by AI. So we're seeing, uranium do well. Oil is a bit above flat now, but there have been really, really big opportunities in energy, and I think there will continue to be, and in mining as well. And then, and this continues to be the story, why the US dollar is the best performer. When I saw it coming, it's the superpower is the 30-year fixed mortgage. Americans just aren't hit as hard from higher interest rates. We'll talk a bit more about that in trades. I'm going to have some, towards the end of this, I'll have some trades for next year, or for the coming year, and the things that I have a lot of conviction in right now and why. But here is sort of the moment you're all waiting for, is what are those 5 magic words? And I think this is the most important thing. It's the thing I repeat to myself over and over again. It's the thing that will get you out of trouble. And the words are, there is always another trade. I mean, you look back, say last year at those trades, I think, I was pretty bullish on AI, and right from the start, really. Now, can I say that I made a fortune on that? No, I've done all right. But you look back and it stings that even if you were on it, and if you were early, and if you were right, it's not going to always be like a 10-bagger, or even a 1-bagger, which is doubling your money. And if now we have such access to so many markets, and you get in this sense of, I missed it. I saw, especially when you saw it coming, and you can fall into all kinds of traps. And also, anyway, here's sort of a list of, I think, things that I push back on by saying there's always another trade. It's fear of missing out, right? So you're missing out on this wave, and you might have to wait for the next one. But it's coming. There is going to be another trade. Whatever one you look back on, and I think it was coming up to the anniversary of the lows from the financial crisis, 666 in the S&P 500. I mean, I was there. We're at 5,500 now. So you're almost like 9x from then. And just thinking about all these opportunities coming out of COVID, that you look back and say, I dream of another opportunity to go back to April, say, of 2020 and buying these things that were so cheap. I did it. I was there. I was doing it. But, in hindsight, it's that aggressiveness that you wish you had. But these things, these sort of one-time opportunities come up over and over again. And if you can get past that feeling of, I missed it, or I need to, get in on this trade, this opportunity, this cross of a moving average, whatever it is, just think there's always another trade. Time is always on your side in this game. I mean, Warren Buffett talks about it like baseball. And if you know baseball, it said, there's always another pitch. What you have to do in baseball is just wait. It's like there are no called strikes. You just keep waiting and waiting and waiting for something to align. And I'm in that mode right now, which is to say, I'd like to tell a story, for instance, still COVID. If you were following ForexLive, about January of 2020, I became very concerned about COVID. And into February, I was probably starting to sound like a little bit of a raving lunatic, that this was going to be a big problem. And, I try to set up a lot of trades that were going to benefit from sort of COVID, and then you can get overthinking it. And I ended up sort of losing money at the outset of it, not as much as I would have had I been long, but being marginally down on something that I saw coming because I kind of mistraded it. When the smarter thing, at least in hindsight, it was just wait it out. I mean, there were so many, I was long gold, and I thought, well, but they're going to be cutting rates. There'll be a lot of uncertainty. Gold should do well, but COVID hit so hard that everything was sold. Bonds got blown up early in COVID, gold, and so that kind of overthinking. In hindsight, you'd say, well, I just should have just gone to the sidelines, because a lot of times on the sidelines gives you that mental edge where you just have cash ready to deploy. You're not trading through something. You're not thinking on something. You're just sort of waiting and waiting for that next trade, right? So that knowing COVID was coming, the trade was to get to the sidelines and just wait for things to get really bad. But when you say there is always another trade, and so you can't, whether it's dollar yen falling, the next dip on BOJ intervention or MOF intervention, that is always going to be what helps you. And I'll repeat it a lot in this. And these are sort of like the ways to make money. And then it comes there's always another trade. It's the mental side of trading. And if you think that what's important are any of these things, I disagree. Warren Buffett talks about he wouldn't hire anyone with an IQ over whatever because he didn't find it useful. Courage can oftentimes work against you. You hear these stories about people making 100x on trades, and YOLOing, and maybe it works sometimes, and that courage is good, but in general, you can take off a bunch of winners, wait for something really to align, and you'll get there. And then just heart, and I want to talk a bit more about that. You could think of that in a lot of different ways, but it's a key part to the whole equation. And feel free to hit me up with some questions in the chat box here. I can see them down here. But in general, I think there's always another trade. What filters back into it, or Steve McQueen reading the Wall Street Journal, is that you see something coming and feel like you got to get in on it. And then if you don't, then you chase it. And I think that most people don't realize, or most people may even get into trading saying, I saw that coming. Maybe it was Bitcoin, or maybe it was whatever it was. AI, could be tech, could be Tesla, I don't know. I saw that coming. And then you think, I have to get in on it. And then you're late and chase. I think, wow, I'm never going to have an idea that great again. But you will. If you do the work and you stay in markets, these ideas come up over and over again. So just wait and stay in the game is another thing I say to people all the time. If you think that it's not going to happen again, it will. And if you don't need to make a fortune in markets. You don't need to trade something over and over again. You don't need to catch every wave to be a great surfer. You just need to catch the odd one. And if you wait and, you show up when the surf is best, and, you practice, you're disciplined, you know how to surf, then you'll catch the wave. And so that, in the meantime, just stay in the game. Don't force it. Don't try to surf in bad weather, or weather that's not good for surfing. Wait for things to align. And, here's another sort of tip that I like to talk about in terms of also, that a lot of problems is it's not finding that idea. It's not necessarily getting in good. It's staying in the trade. And I think this is a powerful psychological tool to stay in that trade. Is to recognize, number one, that the timeline's probably longer than you think, and that it's going to be tougher than you think. I watched a guy just ride a $50,000 trade to $1 million And it was about a 6-month trade, one trade. It's something I never had sort of the ability to do, is to stay in. But it gets easier and easier. And one way is by anticipating the pain of the trade before you get in it, and saying, hey, listen, I think, dollar yen's going to 180 or 200, and it's going to take a little while. And you think about it, okay, I'm going to be levered up 10 to 1 and think how much money I'm going to make on this. But what you should be thinking through is the pain of that ride. Say we go from 160, 189 right now to 200. Well, it's not going to be in a straight line as much as we'd like it to be. So there's going to be 1,000 pip retracements. And are you prepared for that pain? And I think as you go into the trade, you have to really think that through, what it's going to feel like when you're in it. When you're up, you've doubled or tripled your money, and then you're back down to close to even. And are you willing to take that pain? And if you are, well, visualize it. Think about, okay, I'm going to be in this spot. It's going to be tough. And that, anticipating it or knowing that it's going to be part of the process, will leave you prepared not to freak out and cash out and avoid the pain, really, of riding a trend like that. So I think it's a very, very powerful tool to stay in a trade. That's a good one. Another trade, I think, and this is one I believe this is sort of a muscle you can develop, is fading fear. A recent one was at ForexLive. And we were there that night, and it's sort of waiting. This is as Israel and Iran, the tensions sort of hit their peak. And Iran launched all these drones or whatever at Israel. I don't know if it was like 100 of them or what, and they all got shot down more or less. But at that point, it was pretty scary for a lot of people. But I was watching this and thinking, is this a real strike? And then as Israel hit back, was that about to be war? And if you followed it closely and you watched closely, and markets were freaking out here. And it was like sort of at night, and you could see the headlines roll in. So first it's like very scattered sources that Israel was hitting back, and then it's sort of a little bit, then the news wires, and then the mainstream. And every time those headlines hit, you saw things leg down again. And oil was sort of legging up. And I thought, well, that's got to be the cleanest way to trade this, is fade this rally in oil, because I don't think this fear is not going to lead to a war. And you see it over and over again. Whatever the fear is, it's fine. Elections are often the case. People fear a big change. We saw this sort of in France into Monday. There was a big pop in French stocks after the election results, and I think there will be again this Monday. The sun always comes up. Politicians are never as crazy as they appear to be, and change always comes more slowly. So the general trade is to fade fear, and I think that is as good as a trade as there is out there. But it's again one of those things, you just have to wait for it, and it's tough at the time, but your instinct should be to fade fear. And this is another one, and this is hard for people to hear, but bears don't make money. There aren't many shorting firms out there. And I just saw one on Hindenburg, like it spent, I don't know how many millions of dollars doing research on this company, sold the research in return for 30% of the profits. They destroyed this company. The whole thing only ended up making like $4 million. And that's before cost. And like, there's just not that much money in being a bear. And if you have like a bearish inclination, you're gonna find yourself in trouble. Oh, you see skeletons, in every closet, and problems coming all the time. When in reality, things go up and to the right. And here is, what I'm talking about. This is humanity, and this is where we are. We're riding this wave here right now of human progress. at an accelerating pace. We're in some sort of new industrial revolution around the internet and now AI, the digital age, and it's incredibly good in terms of making things sort of easier in the world. I don't know about, I'm worried a bit about how many job losses will come from AI and all the disruption from it, but it's another powerful tool for productivity in the same way that the steam engine was, rather than pulling things around by horse. So here we are, and we have people fighting this. And we just today I saw JP Morgan Marco Kalanovic, sort of a famous, he was like a market structure analyst, and then became sort of somehow pivoted, used his fame on some market structure comments and fixed income to be like this macro or market strategist. And he's been calling for a 30% drawdown in the S&P 500 like every month for the last 2 years. And today he just got shuffled out the door or quit, or not exactly sure how it all went down, but he's not there anymore because it's stupid to be always predicting losses. And things generally get better. And you have to internalize that, I think, to make money in markets, because I don't know many bears that have done well. And then to trade and to think there's always another trade, and to be ready to make that trade and stay in the trade and take the pain and do all these things we talked about, you've got to have confidence. You got to have confidence in your ability to trade, the news you're getting, like, say, quality people, listening to quality people like us, I would hope. And you've got to really believe that you can do it, because you can. Listen, I've seen it a lot. It's tough making money. It's tough emotionally. It's not tough to find good trades. It's tough to lose money. It's tough to take losses, but it's doable. And you got to believe in yourself. And I think the secret to getting confidence, and listen, everybody's been there where you just run cold and it hurts your confidence. And I think the trick to rebuilding that confidence is adjusting your position size. There are times, I trade a big account, and there are times that I'm trading almost nothing just to get a few wins. And I think if you are trading great, scale it up. If you have a high conviction in something, yeah. And knowing too that you're not feeling something detrimental. But if you're struggling, just lower the position size. There's nothing wrong with trading absolutely small. And when there's always another trade, yeah, you trade. Then you say you trade super small. You tick off a few good things in a row. You get back feeling confident again. And you might start to think, like, listen, I'm missing out on whatever it is I thought was coming. But there's always another trade. And now you've got your confidence back. Don't FOMO it or whatever after that. If you've got that patience and that belief that you're going to get the next one, adjusting position sizing, it is a superpower as far as I'm concerned. That's where I'm at now. I'm eager to sort of talk about the things now where I have a little bit of conviction, since I promised at the start. And the main thing is those things that I had a lot of conviction in over a year ago now, I still have a lot of conviction in now. And we still haven't seen that margin expansion trade on AI, which I think probably plays out over the remainder of the decade. The energy transition, it's more important than ever. And finding more energy and different ways to make energy. I think we're finally at the point, if you would have talked to me a couple of years ago, I would have talked a lot about the misunderstanding and how few people realized how much oil we still needed. And I'm super bullish on oil because of that. And it's been probably the best trade so far this decade. If you look at the best performers since 2020, most of them are oil companies. And I think that is a little more recognized now, and recognize how difficult it's going to be. And I don't think people recognize yet that we still need so many raw materials, and we will for AI as well. If you look at, I think robotics are the next leg in AI. AI allows robots to see and hear and interact with the world in the same way that we do, and it will unlock that entire field. But any robot will need about 20 pounds of copper in it, aluminum, some steel, maybe you can build out of plastic. But there are a ton of materials that are going to go into that. And I think getting stuff out of the ground, if you go back to that Industrial Revolution graph, mining is one of the all-time great human achievements and really unlocked the Bronze Age, the start of human progress. And that is, I think, the next challenge that people are underestimating, is how many things we need to get out of the earth and how difficult it is. Finally, the US consumer is as strong as ever, though my conviction in that is starting to flag. I do think it will be worse elsewhere, though, so the dollar will be stronger than other currencies. On inflation, and this is certainly a lively debate, we have central bankers right now saying, the floor won't be as low as it was before. And you have kind of investment banks saying, yeah, the Fed will start to cut whenever, sometime this year, and continue to cut slowly down to 3.5% is the floor. People underestimate how disinflationary the world we are in is. Yes, there might be trade wars, tariffs, and lots of hocus pocus, but there is soon to be a huge surplus of workers. The machines are getting better at making things. And I believe inflation, we're still in the same regime on inflation, particularly as fiscal spending tightens up, which I think is inevitable. And I think the rates will get back down to near zero as some of those challenges become clear. But right now, I heartily believe that the inflation trade is over. And I think markets are telling you that. After the US CPI report, which was low, we didn't see much of a reaction. PCE, same thing. The market has moved past inflation, is more worried about growth right now. So we are going to cut. But another expression I like to use often is generals always fight the last war. And right now, the last war in central banking was on inflation. And now we're into a growth regime where they need to be promoting growth by cutting rates, but they're still fighting the inflation story, which means they're going to keep rates too high, not cut enough. So what happens when you have flagging growth, but rate cuts aren't enough? Well, you continue to get worse and worse growth because rates need to be here, but they're still here. And so you're still putting pressure on growth. And I think until central banks get below that, and that momentum, you're always chasing your tail a little bit there. You have to get quite a bit below it. And I just think they've been too burned. And it's just a natural human reaction to fight the last war. And we will just be in for a tough time on growth because of that. And then I can, I'd want to layer in some AI stories on that, but the timeline is quite uncertain on that. And I just think something like bonds works really well right now because inflation will come down and central banks will be late to cut. And also, we're at that cyclical point right now where there is a slowdown. We saw the Fed's Goolsbee talk about it yesterday. The slowdown is kind of getting clear, but 25 basis points isn't going to fix it. And yeah, you might goose markets, but markets are already goosed. I mean, one slip up from NVIDIA or whoever, it could be a real reckoning in a lot of stocks. So I'm at that point right now, kind of in that pre-COVID period where I'm saying, you know what? Maybe markets go up another 5-10%, leave that for the other guy. Let's play it safe here and just wait this out. And I think, these political developments are pretty interesting as well. So we'll get to that in a second. I just see one question here. Wilvid, how do you avoid checking your MetaTrader so you can avoid the euphoria or fear while the trade is moving up? And that's now everybody feels that, right? Like you're checking it. Oftentimes that means you're probably trading too large. If you can't sleep at night with a position on, your position's too big. If you don't have a clear vision on what your parameters are, like a target and a stop, or what's keeping you in this trade, like I don't use a lot of clear stops and targets, but I do in the fundamental sense about why I'm in this trade and what I believe. And if those are unchanged, you should stay in the trade. But that euphoria and fear you can mitigate it, one, by anticipating that pain. You know, if you're in this trade and you say, hey, listen, I'm going to be in this for a while, it is going to be painful. Like that never, part of that is like it never goes away. To answer that question. Now, as sort of the account grows, your pain tolerance for whatever sort of, you know, $100 variance used to bother you is just totally insignificant. But there's always going to be a limit on what you're comfortable with. And so you just have to be trading small enough to tolerate that. And it varies based on the person. But, you know, if your dream is in 6 months to 10x your account by aggressively trading, listen, I have bad news for you. Like, it's very tough to do that psychologically for most people, because you might be up 5x and then only up 2x. And you go from 500% down to 200%. Listen, 9 out of 10 people are going to get out then and say, listen, now, well, I still did all right. But to ride it all the way, you have to be incredibly disciplined in taking that pain. You have to be ready for it, but you have to have just incredible conviction in whatever it is you're in. But listen, if you finish up and you get out and you're comfortable saying there's always another trade, there is. So keep that in mind. All right, so I'm really, like I say, you go in the chat or the Q&A. I'm happy to take any questions. You know, that was sort of a summary about what we're talking about here. And you know, what I'm thinking about now, I just saw that data cross ADP a little bit low, jobless claims a tad high. Not anything really to get too excited about in that data today. We get some durable goods orders and ISM here today, services. So if you're watching the ISM services number closely, it's an interesting one. But a lot of people thinking about politics right now, and I am too. I'll be the first guy to say, like, politics don't matter that much. I mean, if you were to watch business news, you'd think politics drove every move in markets, but it doesn't. But the trade right now might be politics. It looks like Joe Biden's going to drop out. I mean, markets are pricing in a pretty high probability of that, over 50% now. And then it'll be Kamala Harris, which, you know, you can make your own political judgments about how well that's going to work. I don't think it will. But I think the edge case is that somebody else comes in who's actually popular and can win. But I think a lot of people are looking at it the wrong way. I don't know if it matters that much if it's Biden or Trump, as long as it's not a sweep. And there's a very high probability of Republicans taking the Senate just because of the seats that are up right now. So it really comes down to the House. And I think until the debate, you had the market pricing in probably a Trump win, but Democrats taking the House, because Democrats a lot of them are running ahead of Biden. Now I think it's gotten so bad for Biden that they're going to lose the House. And you saw the market, I think, reprice into a Republican sweep. Now, Republican sweep was looking pretty good for stocks because there's a Trump tax cut that was going to expire. It'll probably cut corporate taxes more. I mean, when you have all three houses in the US, that's really the only time you have power to do something that's going to matter for markets. And it was the trade on the night that Trump was elected. If you remember, such a shock. And if you were on ForexLive that night, I was telling people they swept. Republicans are going to cut corporate taxes. Everybody was in a panic. Massive turnaround in markets started the next day as the market priced in huge corporate tax cuts, which were eventually came. And it's just a pro-business administration. And we'll get that again on a Republican sweep. But the other thing you saw was bond sell-off. And I think this is going to make it a little more complicated this time, because the fiscal situation needs to be reined in. And if you have a Republican sweep, you know, there's a line of political talk that says, well, that's the party of fiscal responsibility. But the reality is those days are over. And there would be these corporate tax cuts, and there won't be any less spending. So we're going to have just bigger deficits again. And that's why the bond market had such a rough go since the PCE report on Friday. And I fear that's going to be the case again. So that's, I think, the cleanest trade on all of this. And because a lot of it can reverberate back into stocks. If we see yields rise, we see more spending, and then we see the bond market start to kick and scream a little bit. I think it's ultimately probably really good for stocks, and that's fine. But I also worry about bond yields, and we may see a very strong US dollar come out of it as well. But again, politics can be so volatile, and I think people are reluctant, even if it is Kamala Harris, to price in that kind of a change that quickly. Anyway, this is a little more mechanical questions here now. Like, nice to see some questions. It's Adam, not Justin, but thanks, Anthony, for the question. Yeah, what are the key economic indicators we could focus on? Yeah, listen, right now, it changes. I talked about at the start of the webinar about how things change. And if you would have asked me 2 years ago, I'd say inflation's the only data point that matters. And now I'm here to tell you that inflation doesn't matter anymore. It's all about growth and jobs data. So if you're trading almost anything right now, it's the growth data that matters. Now the market's still hung up on some inflation numbers, particularly like Australia. But for the most part, I'm only watching the growth numbers. So something like initial jobless claims, the most forward-looking indicators are generally sentiment surveys. So you have like consumer confidence in the US, and you have this ISM services number that's coming up in just over an hour. And there's similar sorts of ones elsewhere. Now, the problem with sentiment surveys is they're not that good at predicting spending, and particularly since the pandemic, which is a bit of a head scratcher, but I think that will start to work again. And then as you get down the line, well, the second thing, you have this consumer sentiment, and you have the actual spending. So retail sales numbers, very important right now. And that's somewhere I'm watching very closely. And you have to kind of break them down, because something like gasoline can skew it. Because gas prices go up, people aren't going to stop spending on gasoline or diesel. So, and within that, I'm watching corporate talk on consumer spending. So a little while ago, we had McDonald's say, hey, listen, people are pushing back. And that was kind of a bit of a tell. I'll be watching people like Walmart or Target or any sort of local retailers in any of these places to say, hey, listen, the consumer has pulled back a lot. Restaurants, very, very sensitive to the consumer health. Travel. So you look at airlines, some of them have been cutting guidance lately. And that's why lately I've been less and less constructive and more worried about markets in general. And so we'll see who suffers the most pain. I think a place like Canada, here where I am, is in for a very rough ride. Europe, we'll see. It has proven resilient. The UK, I think, could be in some pretty big trouble as well. How do you trade if robotics is the next thing in AI now? That is a great question. Sorry, I don't know, Xiaomi. Because that is the thing I'm thinking about probably the most right now. And I think Amazon is one of those things. I mean, they kind of have a huge workforce in terms of mega cap tech. They can build a massive moat if they unload millions of employees. Millions, I wouldn't say millions, but hundreds of thousands, and replace them with robots. And then you could see it on the driverless car as well, the delivery side. So that's one, I think, and I think the market is just starting to pick up on that. Again, I talk about raw materials and robotics, but I'm pretty open to a lot of ideas. Some people think that an AI trade is in financial services. That I'm open to that as well. But robotics, Jensen Huang from NVIDIA talked about heavy industry. So anything that's labor intensive and in industry, and a lot of that's automated already. But I'm sort of open to those ideas right now. I think we'll have mines that run without people. And so if there's demand for those resources and you're improving margins, I think that's pretty powerful. But I'm afraid of getting a little ahead of myself. That might be a trade for 5 years from now. And I don't mind waiting because I think it could be that good. But there's probably some lower hanging fruit in the robotics space that, once the hype starts, I think we know how things can overshoot, particularly in markets now. And I talked about how markets change. And it used to be markets were a little more patient and not, you'd have to have earnings before they priced in, 80 times earnings. Now it's just so fast and so much hype, and that's fine. That is what the market is right now. So if you can get ahead of that. Why do candlesticks reverse on the hour? A lot of times there's news on the hour. You have things like the fix that hit on the hour. You have a lot of traders who trade around the hour. I'm not sure that's always the case, but that's why you might see a lot of candlesticks reverse on the hour. How do we listen to ForexLive during election news? Why do we read it? I don't get out and talk in front of the camera too often, but I'm doing some TV stuff here all day today. So yeah, go to forexlive.com. Where am I in the Bitcoin trade? I read a survey from Bank of America last week, and it was about young people, like young, ultra wealthy people. Maybe not wealthy, or I don't know if they're ultra wealthy, but people who are about to inherit a whole bunch of money. Really, this is a Bank of America survey. And they were really hated stocks and loved collectibles and Bitcoin, crypto anyway. And that made me think that there is more money coming into the space. Right now I don't see a catalyst, and that it's pretty saggy right now. You would have thought there'd be more momentum above 60, 70, but the ETF trade's done, the halving's done. Maybe there's some more ETFs and other cryptos that get the market excited. I don't know if there's that much money waiting on the sidelines in the short term, but I was impressed by that survey and how many people want to park it in the long term. Then again, you're just chasing performance. If the performance isn't there, they'll look at something else, but maybe it's another cryptocurrency. I don't know, but that made me think that there could be another leg. I don't know if it's really a hedge though, Bitcoin anymore. I mean, it's just beta. It follows the market. And a lot of times it runs ahead of the market. And that's another reason I'm a little bit cautious right now. Bitcoin and Nvidia and Bitcoin and the NASDAQ have a high correlation, and Bitcoin has fallen off a little bit. And so I wonder if we're really on very delicate footing. Gold, I think, is more of a geopolitical story. I think the big tell in gold last year was when Russian reserves were confiscated. And now we see China buying aggressively. I think, Russia, China, Middle East, Turkey are getting out of US dollars and into gold. And that is a decade-long trend. Now I'm kind of sidelined on gold right now because it's run up a lot. The seasonals aren't great, but come November, especially if the US, we do get this Republican sweep, I think then you have maybe a whole bunch of spending again, treasury yields come up. I could see a case for gold then, but I'm constructive on that. The Mt. Gox thing, selling that, I mean, maybe that is part of it. 9 billion, I think, in Bitcoin. You'd think it could absorb that because of the size of the market. That sounds like a big number, but it's not that big. But again, a lot of the things around Bitcoin are the psychology of it. And so, maybe you're just waiting for that headline to say they're done selling whenever it is they're selling, and then we get a huge run. That's totally possible, but I don't think I'd want to front run that because unless you can figure out the timeline. Again, that's where you have to do the work. And I apologize and say I really haven't in that trade. Is that, okay, when are they done selling? What's the plan? What's the timeline to sell? Do we have any indication on that? If you get maybe ahead of that headline, you could do well. And that's probably the trade I'd be looking at in Bitcoin. Yeah, okay, another gold question there. Yeah, again, I think I'm a little bit cautious on gold right now. I think some gold miners are looking very cheap. A lot of the time, the way to make these trades is in miners. And again, I think if we can automate mines, then that's even levered more because costs have been killing miners lately. I'm a little more cautious right now. Then again, I have been impressed that we have been able to stay over 2,300. I'm talking actually to Kitco today. If you want to sign up to another webinar, or I'll post a video later. So Kitco is a big gold news site, and we're doing a whole webinar here in a couple hours. So I'll talk more about gold then. Do I believe Bitcoin is the future? No, I don't believe Bitcoin is the future. I think it's a tradable asset, and it's based on how much excitement there is in Bitcoin, but it's obviously nobody's using it to buy things. That's what people were talking about 10 years ago, that you were going to use Bitcoin to buy things, and I don't even hear the Bitcoin bulls talking about actually spending Bitcoin now to buy things. So I thought that trade was pretty obvious, and it would hurt Bitcoin a lot. Maybe it did at some point, but it's been impressive how strong it stayed despite that. All right. Well, do we see any other? Okay, a few other questions here. What was your most difficult trade? Wow. I don't know. I don't know. Nothing really comes to mind that much. I mean, there have been some painful trades. The very first trade I took, this is 20 years ago, was IMAX, the big theater company. I thought they were going to get taken out. And then they had an accounting scandal. And that was a rough one. In hindsight, it wasn't really that much money, but when you're starting out, it's all a lot of money. But that was sort of a reminder that things can come out of the blue, like an accounting scandal. That there's just no way of anticipating. And so you have to be careful. You learn all these lessons that everyone's learned a million times. In terms of like FX, yeah, I don't know. I guess I just forget about the tough ones and the difficult ones. I mean, maybe that's part of the reason for success, is being able to move on. More difficult recently, it's like AI. Like, if you read ForexLive right from the day ChatGPT was launched, I was pretty much bullish, and I had it pegged as NVIDIA being the trade on the picks and shovels. And yeah, I made some money long NVIDIA, but I think what hurts me often is being right and not making as much money. And that's where there's always another trade comes in. You think, well, yeah, all right, missed that one. It's been an incredible trade. Could have 1,000x'd it with options or whatever. And yeah, well, there'll be another one. There will. So I guess that's the point. Yen intervention. I feel like, I don't know, this was my ego, but I was talking to Nikkei, the main Japanese news service. They call me and ask about the yen all the time. And I was dumping all over Canada. So Canada, it's not the BOJ that intervenes, it's the Ministry of Finance, but that's not an important distinction. And he came out with this tough talk last week and was like, it's one-sided, blah, blah, all the usual signals about intervention. And dollar yen went down like, maybe 30 pips, and then went right back up. Then I was writing like, this guy is kind of like an embarrassment now. He's lost his power to verbally intervene, and the market's laughing in his face. And I was telling this to Nikkei. I'm not sure what they wrote up because I don't read Japanese. And then he resigned the next day. And, a lot of that's the market telling him what. But so they've installed a new currency czar, a new currency person in charge who will decide about intervention. And if I'm him, you have to establish credibility, but you also have to wonder if just spending a whole bunch more money on intervention is hopeless. So you're thinking through, what could he do? Could he set a ceiling on it? Could they try some other system, some auctions, some other kind of relief valve? I don't know. You wonder if he goes big, 10 times what they've done before and absolutely slams it. So I would be very careful about being long right now. And I am thinking that he will do something. So whatever the playbook was before, I'm worried it won't work. Yeah, well, that's it. If I think the inflation trade is over, and I think, the growth trade is on. So if you have if you think the inflation trade is over, it's now about growth, should we expect a solid US dollar? And I do because I think the cyclical trade is going to be tough. I mean, it's the other side of the dollar smile where we get bad growth and the dollar does poorly. And the dollar does well as a safe haven as we start to see like flagging growth in the rest of the world and them cutting rates more. So, a lot of roads lead to the US dollar, and they have for years, and it's sort of boring, and I want another trade. I'm tired of the dollar trade, but I believe that's what will happen. Borislav, what do I think about the Fed's monetary policy? Is it really restrictive? Yeah, well, like this is what we're talking about. In the 30-year fixed, how much are you really feeling if you have a fixed mortgage rate? Yeah, reducing the balance sheet a little lower. I don't worry too much about the balance sheet. I think it's a little bit overrated, but is it really restrictive? It is a very good question. Now, I can tell you it is in a lot of these other places, and that's why we're getting a cyclical slowdown. And I don't know if it is as much in the US. And that's why I think the rates, the spread will stay wider. Not only that, but you have AI is a US trade, right? All the companies doing it are American. So there's money flooding in on that. American dominance of financial markets. The MSCI World Index is like 63% America now. Chances are winners keep on winning. There's no necessary mean reversion here. And so I really think you just can't get away from it right now. So the Fed will cut rates slower than others. Do you subscribe to news and data services used by big traders? Well, ForexLive is on every trading floor that I know. So I'm more than subscribed to it, we do it. But yeah, I have every news service in the world. So, but a lot of it now, I mean, I'd suggest if you're trading, you can afford it, I think it's valuable. I think paying for news is very underrated. And paying for access to news and having the news up on your screen, like investing in a system where you can see the data, very important. But, a lot of it you can get from Twitter right now. You just got to be careful not to get into the stupidity that goes on there and used for news. Again, it's like the secret to everything is discipline and hard work. And trading's no different. But it really sucks to do those things all right and blow it. And I'll end on those 5 magic words again, that there is always another trade. And if you can repeat that, and when you're feeling whatever it is you're feeling that's about to make you make a bad decision or bad trade in markets, remind yourself about that. So that'll be all, I think, for now. Which news squawks you remember? Last one, sorry. I love Live Squawk. Love News Squawk. Both of them. I've got both. Having 2 squawks at once is super annoying, so I have a ducker to knock out one. But the guys at News Squawk are great, and I highly recommend that. So we've got a wonderful sponsor here. Thank you for bringing me in here today, and thanks so much for let's see if I can stop sharing my screen here for a second. Can you guys see me okay? So yeah, TraderCademy, high marks for them bringing me in. There are people out there who want you to trade well, and there are people out there who just don't care. And I've been to too many industry events where people say, hey, listen, retail is just going to lose money, so who cares? Just churn them. And that just upsets me. And someone like TraderCademy, our sponsor, wants people to learn and understand markets and do well. And those are the kind of people you want to work with. So happy to be hosting a webinar with them. Anyway, thanks. Sorry about the little bit of delay, and thanks for coming for those who were here. And appreciate everyone hopping on. Okay, I'll end it there and sort out what markets are doing today and get ready for the ISM number.